So welcome to this video. In this video, we are going to discuss about financial systems and procedures. So the contents of this video are, we are going to discuss about what is an accounting cycle, what is the advantage of having a financial system and procedures, what is the purpose of organizational control, and designing financial systems. How do we design a financial system? We will be like looking at the purchasing system, sales system, and payroll system. So financial systems and procedures can be said as the rules that are established within a business to record, summarize, report transactions in a stated format and sequence. Okay. So assume that you have started a business. Okay. So you are the only person in that business. So you are the owner and you are the employee, and you are like selling some kind of a product. Okay. You feel that this product will be like only selling around some 1 unit per day. Okay, only one product will be sold like per day, and every time you sell this you have to raise an invoice. Okay, you have to create a bill, and you send it to your customer, and your customer sends you the payment. Okay, so this is the process. Okay, this is the process. So what happens is, like, if it's going to be just one product per day, you don't have much of a problem. But if it's going to be like 20 products per day, then you can't like handle it. Okay, you have to have your accountant. Okay, now what happens is, even the accountant cannot handle like so many records that has to be like created on a everyday basis. Okay, because every day 20 products sell, so you have to create 20 invoices, and you have to receive the payment of all those people. Okay, so now what you do is, the complexity begins here. Okay, so you create a separate sets of books. Okay, you have to create a separate sets of books. Okay, so one book would be like sales book, the total number of sales you have made. Okay, another book is cash sales. Okay, the total amount of cash you have received as sales. Another book is for credit, so the units that you have sold, okay, some of them could have been in credit and some of them could have been cash. So you should maintain a credit book. Okay, see, this credit book also, within the credit book you have to have like different customers name. Okay, assume that 10 customers of yours are like buying on credit, means you have to know their name. Okay, on which date they have bought and how much is their credit sales they have taken. Okay, so each and every sale now becomes like a complicated thing. Okay, so you can't like simply send a WhatsApp message saying that this is invoice. Okay, now you have to create a proper kind of a bill. Okay, a bill where it should be like this. So you can see say sales invoice. Okay, format. Okay, so here we have a sales invoice format. So look at here. So this tells you the date on which the sale has been made. What is the number of that bill? Okay, what is the customer's ID number? So we can't like have a name for them, because if your company becomes more professional, you have to give a customer ID number. To whom it has been billed, their address. Okay, and if the shipment is going to be to a different address, that has to be recorded. And who's the salesperson? What is the shipment date? Okay, and any terms or something that you can have, the number of items you have here. Okay, the item number or code, then the description about the product in terms of something like the name of the product, what is the quantity of it, what's the price, the total. Okay, then the tax and every details. So okay, so you could also see the other comments that the payment has to be made in 30 days. Okay, and the tax details is also given. So with this one single bill, okay, there is a process now being established. As your company has become so big, okay, you have an accountant, you should have a warehouse kind of a place. Okay, and you have to employ a kind of warehouse employee, okay, who sends or ships the products to the customer. Okay, so what happens is, with a single bill, you know what's the tax that has to be paid. Okay, when the customer will pay the money. Okay, which items are moving away from our company. Okay, and to which customer it is going. Okay, See, with this information, it's like making your company much more standardized and much more easier to cope with. Okay, so it doesn't matter whether you sell 200 items, okay, or 2000 items per day. It doesn't matter because you have now a structure. Okay, so the customer asks you for a product, you tell them this is the price, and they said yes, we will buy it. Okay, we want the like these, we want like these 2 units only we want to buy. So you send them an invoice. They either say it's a cash or a credit. If you accept it, you sell it on cash. Okay, if you say it's credit, you go in to sell it on a credit. So once you have raised the invoice, this invoice, one of the copy goes uh, to the warehouse employee. The warehouse employee will ship and pack these 2 items and send it to the customer. Okay, the customer will receive the item and he will acknowledge saying that yes, I have received these 2 items. Okay, so this is how a sales process is being made. Okay, so when you have a process, when you have a financial system and a procedure of work, then it is much more easy to cope up how much ever volume of work comes up. Okay, so that's about the financial systems and procedures. This helps to have smooth flow of transactions without error or fraud. Okay, so employees might mistakenly do some error, or they might purposely, they might create a fraud. Okay, but if you have like proper financial records and a system, then you can ask the employee why he has done like that. Okay, financial systems and procedures exist specifically to ensure that financial transactions are properly carried out. Okay, so all the transactions should be properly carried out. We have to get a requirement from the customer, then only we will say that we have that goods, we tell them, then they will tell yes, we want this. Finally we will make the invoice and we'll send them. Okay, so there is a process here. Okay, accurate and timely management information is produced. Okay, so once you have a bill like this, on the end of the month you can easily find out what's the total sales that has been made, which items have been sold. Okay, what is the balance of items in the stock, and what is the total amount of tax that has to be paid to the government. Okay, in terms of how many customers have paid in cash, how many of them pay are in credit. Okay, we can find out which credit customer is balanced, is having a balance with us. Okay, so we can get so much of information. Okay, and we can then decide like how to uh, proceed with that. Accurate record of all transactions are maintained and retrieved. Okay, so these records are not only for like single purpose use, they're going to be like kept for a long period of time. Okay, because we never know when we need that kind of a record. Okay, so we should always like keep on these records as a backup. So we look at the financial system procedures and the accounting cycle. Okay, so how this entire things are recorded in the company's accounting cycle. Okay, so the first one is whenever there's a transaction is made. Okay, there is some kind of a supporting evidence. Okay, so whenever we sell, we generate an invoice. Whenever we are going to pay, we have to have a bill. Okay, so without a proof, no kind of entries can happen in accounts. Okay, so there has to be definitely a proof. Next one is once we have a proof, we have to create something called as a journal entry. Once we have created a journal entry, then that goes to something called as a ledger. Okay, and from ledger it goes to trial balance, and from trial balance it goes to statement of profit or loss, and then finally it goes to statement of financial position. Okay, so this is how the transactions keep working. So each and every element of it is like really important. Okay, earlier these all these elements have been done through manual work, but now they have like been after computerization, a lot of manual work have been like reduced. Okay, so we don't now prepare ledger or trial balance and all. Any transaction that is like passed as a journal will automatically create the SOPL and the SOFP. And if we require, we can also get a ledger posting. Okay, we can find out like what is the balance in the ledger for each and every account, and we can also see whether it's like arithmetically whether it's accurate or not. Okay, arithmetic accuracy will be definitely there because the journal is like once we have created, Okay, if humans do it, there can be some error, but if computers do it, there will be no error. Okay, so the journal entry alone has to be created in the computer exactly and perfectly, because once it is done, the computer cannot like think or understand. It can just post the entry across all these accounts. Okay, across all these phases of accounts, it will immediately post it. So the human is an important element of this accounting cycle, whether it is a manual accounting cycle or the computerized accounting cycle. The human passing the entries is like very important here. Okay, so we have a separate video on how to create a journal entry, so that we'll do later. So now we'll see like what is the advantage having a financial system and procedures. Okay, there are several advantages to having formal documented systems that staff must follow within the organization. So these are the benefits. All transactions will be recorded in the same way, and the required information will be recorded in the correct place. So once you are selling some kind of an item, okay, all sales has to be recorded in the sales ledger. Okay, if it's a cash sales, you have to record it in the cash book also. If it's a credit sales, you record it in the credit ledger. Okay, under the name of the particular customer. Okay, so there is a process here. The best practice, the most efficient way of recording transactions can be adopted by everyone. See, every company has a similar kind of procedures here, but what is the best for the company develop will be developed by the employees themselves. Okay, so either the employees have to develop it by themselves, or we have to appoint an auditor or an expert accountant who will do this kind of service for us. Okay, who will set the financial system and procedures perfectly. Staff can refer to the written procedures if they are in doubt as to what to be done. So assume there is going to be a sales return. Okay, how are we going to account it? So first, goods have to be sent by the customer, okay, to our godown. So our warehouse employee has to say yes, the goods have been received. Okay, that copy of some bill or something that has to be sent to the accountant. The accountant will then confirm that the goods have been received. Okay, he will send a message to the customer saying the goods have been received, okay, and they are of in good quality or not. Okay, if the goods are in good quality, then he will initiate the return of the money. Okay, return of the sales money he will initiate. Okay, so see, there are like some unique cases where the returned products can be damaged or anything. Okay, but for everything there's a procedure. Okay, in the procedure or rule books, they would like clearly mention like what should be done in a particular circumstance. So we don't need to do something which is different this time and next time it's different. It's going to be uniformly same only. Okay, and new staff can be trained quickly, because like there's only one correct way of doing things and they just have to learn that correct way. Okay, the auditors can follow transactions more easily if they are recorded in the same way. So it's easier for them to look at the cash book and try to find out. They can search for the invoices. They can find out whether the cash book is correctly reflecting the amount. Okay, they can find out whether the total balances made by the customers are like tallying up. Okay, they can easily find out uh, they can easily do their audit here. Transactions which have not followed the procedure could be error or fraud and may be identified more easily. Okay, so anything which is like deviating from the procedure is usually an error or a fraud. Okay, so this is the advantage of financial systems and procedures. So we'll see like what is the purpose of organizational control. So why are we actually doing all of this? Okay, the main purpose of doing this financial systems and procedures, first one is to safeguard the company's asset. See, there might be the warehouse employee might steal some goods to his house. Okay, so what happens is we have to have a check and balance at the warehouse employee level. Okay, so the warehouse employee will have a ledger. Okay, or will have a book. In that book he has to write whatever goods that have been received by him. Okay, from the suppliers he will write. Okay, so I have received 100 units of this item, 100 units of that time, he will write. And whenever he dispatches goods to the customer, he will say these goods have gone to the customers. Okay, so at one point of time, the physical goods, okay, and the and the record which is made in the books should both tally. If they are not tallying, then there's some kind of a error or a fraud. Okay, in that way we are maintaining the company's asset. It's not only here, even if you go to a supermarket, okay, you will find out the same concept where the records are kept. Okay, the record and the physical goods in the supermarket should match. Okay, the closing stock of the supermarket and the closing stock which is in the books, okay, both should match. If they are not matching, either the goods have been stolen or the goods are like wrongly recorded, okay, or recording system has gone wrong. Okay, so that is a problem. Okay, so if you have a proper accounts, your company's assets are safeguarded. Efficiency, because we don't need to find out like what has gone wrong. Okay, we are not like worrying about what happened wrongly and all, because we have an efficient system, thereby everything is recorded properly and we follow up properly. So we don't need to have waste time in unnecessary what to say, follow up or confusion. Next one is fraud. So when there are proper records, we can easily find out who's doing a fraud. Okay, and errors can be minimized if the procedures are very simple. Okay, and which are like so easy to do it. Okay, so this is the real reason behind why we should have a financial system and procedures. So how are we going to design a financial system? See, each system, okay, a system is something like a purchase system or a payroll system or uh, a sales system, like that. Okay, a particular department is a system. Okay, each system is made up of a series of procedures. Okay, like step 1, step 2, step 3, like there are like procedures. The system designer, who's usually the expert accountant or an auditor, will need to first consider the objectives of the system, the required outputs and the likely inputs. Okay, so how does this work? We'll see an example here. We'll take an example of a sales system. Okay, see, the objective of a sales department or a sales system is to record the value of sales, okay, to each customer and the amount outstanding to be collected. This is what is the objective. Okay, so they need to know how much sales have been done to each customer and what's the amount that is being outstanding. Okay, they can also collect data in terms of which product is selling, okay, to which area it is selling, on which date it is selling. But predominantly this is what our main consideration is. Okay, how much value of goods has been sold and how much money has to be collected. See, the output here, the output of recording all this is a report. Okay, we can easily find out through how much sales has been made to each customer, date wise, product wise. Okay, how much of credit sales have been made. Okay, and are they paying on time or not. Okay, this is what we are ultimately bothered about, because we want to ensure that every sale that has been made, okay, the cash has come in properly. Okay, so that's about the output. That's our ultimate goal here. But what is the input here? See, the entire process starts from the customer making a placement of an order, either by fax or telephone or mail or through an app. If he's going to make a purchase request, how are we going to process it? Okay, and finally we are going to give it as an output. Okay, and finally we also have to achieve a objective.